Okay, now for part 2 of the accelerator explanation. First, we're going to take a look at the performance. This is a two-month historic test run. We're in control points, but the results won't be a whole lot different in tick by tick because of the indicators used. But I first wanted to show you kind of what it does on the lot size adjustments, reverse hedge-wise, and what the overall performance is actually versus what it kind of shows up here on the results screen. These charts, in case you weren't aware of it, depict the activity of the expert on a balance versus equity basis, with the green lines being equity, the blue lines being balance. You can see we have a fairly smooth climb up here, but every time we get a equity balance differential, the expert is in a reverse hedge batch profit taking mode, and this equity is increasing up to the exit point. There's really only one loss here that it took right there, and that loss could be either on a stop out, or it could be on a reversal. To minimize this stop loss issue that the fraps experience, if the indicators pick up that the trend is reversing, it'll exit into the opposite position. You can see that we have a pretty good win ratio on this. We have a 92% on the short positions and an 81% on the long positions, but the reality is that this expert has over a 95% win rate, and that's because every time it takes a batch profit win, one or two positions will have to show as a loss. The greater lot sizes will override the smaller ones, so we actually have probably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, maybe 20 or 30 positions that show up as a loss that are actual wins. So this overall win ratio is very, very high for this expert, at least 95, perhaps even 98%. Down here we can show where the reverse hedge picks up. There's actually two levels of it. One of them is intentionally designed to kind of intensify the wins on small reversals, and then the other one is for say a long trend breakout in the wrong direction. So the first order is at a 0.1, the second order 0.2, the third order is a 0.7, and then we come up with a profit overall when it actually closes out. And we don't even see where we've taken a loss on some of those smaller ones. We've got wins on everything. Here's one. We took two losses here against the larger lot sizes. And those two show up as losses, even though the whole thing is actually a win. Okay, let's take a look now at what the expert's doing. The main difference between what the accelerators and the fraps do is that it does not execute on stalls at 100 MA like we'll show you, like what 100 MA does. A 100 MA would have picked up this as a stall, and we would have traded this area. Instead, we're taking the more prolific areas with the trend on a much longer MA. This is a 300 MA, which picks up the longer trends in these more liquid pairs. So we're not confined to these exotic short swings. We're going to trade the euro, the JPY, the Audi. We could even trade the pound dollar or the pound euro with this. And because what we're going for is to pick up the moves on the trend, even though the primary take profit on this is at the 15 pip range, which is the same as all those other, the quasi scalping level, which is in that 10 to 15. In fact, I think this setting is actually taking 10 pip TPs. There's two other primary conditions that we're going to be using on the indicator side. The idea here is that we want to try to pick up these moves as they are happening at this level. In other words, we're picking up the trends, but we're scalping these small reversals. So what we're doing here is we're trying to pick up a down on this 12 MA against an up on this 3 MA, which should put us on a uptrend in this little reversal here, and ideally we would pick up up here at the top perhaps, but for the purpose of getting these higher lot size more profitable positions in place, what we wanted to do is, this is the perfect scenario right here. We're picking up a long trend down on a small reversal. Our first order is at the bottom of that. We're picking up a second order here, a third order here, and then it's heading on down. That's the core of the strategy. In the meantime, we'll pick up a little scalp here. If that is just a short reversal, we'll pick up here we've got 3 scalps, 10 pip scalps on that trend, on a small reversal, and that's basically the way the thing is supposed to work. We try to minimize the losses or any potential losses for trends by using this. This is a reverse hedge, commonly called a reverse hedge, where we add orders in the opposite. When the price moves against us, we start adding orders, and larger orders that will close out at a batch profit. In this case, the batch profit's set about $500. We could reduce that if we wanted to be safer about this. We could reduce it down to $50. At that point, this expert would close orders right around here. It's kind of a protective issue there. In this case, we're making some money on that. It's a little higher risk, but we're showing you the potential here. This expert is in an initial optimization state, so we're playing with this on various currencies to see where we're going to come out the best. But the overall results we saw from this test here was 100% profit in 2 months, which is probably kind of nominal on this expert, and much better than what the other type scalpers are doing. Main reason is we're getting a lot more trades. We don't have to restrict trades. There's no limitations on Fridays. We're not limited to any type of nighttime trading. This is full-blown all the time, 24/7. This expert can operate. And once again, we're going with these trends. We're not going on stalls of any kind. We want to take the profits during the maximum moves. So there you have the basics of the Xccelerator, and if you want to tune in to the broker strategy test, we'll see how it goes here next week on 3 pairs. Thank you for watching.